Welcome to Bitcoin Escape Plan. Bitcoin has been dropping off a cliff. And how low can it actually go? That's what we're going to talk about in today's video. I'm going to be taking you through a historical analysis to see the precedents for other times in past markets where the same exact thing has happened. It has nothing to do with the news or anything like that. It's just these key indications on the chart that we're going to take a look at. As always, I like to start off these videos with a 4-hour chart analysis just to kind of reward anyone who's here early and to know what's going to happen in the short term. Before I get into that part of the video, let's go over to bitcoinescapeplan.com. You can check, been doing several weeks now where I've been giving a Monday update about the levels that I think are most important. Usually pretty accurate, which is crazy to me. There are a couple other articles that are on there at the moment. They're going to be coming off shortly. The website's going to be going through some changes over the next couple weeks, which should be exciting. Go check it out, bitcoinescapeplan.com. Get the key levels in your email before they arrive on the charts. Oh my God, let's look at Bitcoin. So obviously, pretty crazy drop over the course of this week, beginning on Wednesday of last week. Went all the way into this week, had more prolonged downside after Monday. In Monday's video, I did talk about the possibility that we would see a major failure lower, and we did. We certainly did. It continued, I think, considerably lower than anyone would have expected. I don't think anyone was calling legitimately for like 60. What did it get to? 65.9K. Yeah, nobody was that specific on what they were calling for. 70K is reasonable. And I believe, I forget the exact levels I was talking about. I think I had mentioned, 73.8 certainly I had mentioned, and about 69K as well. Super relevant, just knowing from the past cycles, which again, we'll go over that a little bit later on in the video. But specifically for the 4-hour analysis, what we want to look for is you can see we still have not shown any strength at the 4-hour chart, but this is a little bit stronger than we've had since about Tuesday at the end of January. And then obviously we had the major breakdown and failure after that. So not the most bullish signal, but basically this is the most upside momentum we've had above the 4-hour SMA since then, a couple weeks ago. And what we're looking for now is price psychologically is caught between these rocks in a hard place. Between 100K is the high psychological barrier, and the previous all-time highs are the other ones. And it seems like we ripped through 73.8 like tissue paper. That's the 2024 March peak, which again, I'll go over later in the video. But the one that we went much closer to, again, we went to 60, what is this? Low of 59.9. So considerably lower even than the highest monthly closing candles of 2021, which is very telling. So in the short term, what we're looking for is to see if there's any strength behind this recent drop and back up. It went basically from 60 to 70 over the course of Thursday and Friday. Pretty significant recovery after dropping so low, so quickly. So what we're looking for now is, are we seeing a continuation of the 4-hour breaking down, which at the moment, it does look like it. This is the other key point. Super important, actually. We never even get to talk about this band because we're always so focused on the top band of the 4-hour. This is the anchored VWAP tool, which for anyone who doesn't know, you can just check other videos I talk about all the time. I draw my anchor VWAP tool from the earliest candles in 2009. Like I don't, or at least earliest that they give you on this chart, on the Bitstamp chart. I don't like constantly adjust it or change it. I just leave it on the earliest low candles that you can get on the chart on the monthly. And it's really accurate. It's alarmingly accurate. So right now we have the upper band is starting to curve downward. What does that mean? That means by the time we interact with it, we're actually going to be lower than we would have needed to be, therefore probably acting as resistance more so than support. Potentially can break to support, but I'm not really expecting it. At the moment, that's sitting at 96K, which is the fib pivot that we talk about all the time on this channel. So I am anticipating that we get rejected off of that next time. So the important thing that's happening right now is we are currently at the middle band. So as you can see, the bottom band way down here, There's a possibility we touch that. I don't pay for TradingView, so I would have to go back way far back to see the older ones on the 4-hour time frame to be able to see that. I would be very curious to see that, honestly, if we pinball from the top and have to go down to the bottom, because most of the time it spends its time way above this 4-hour anchor VWAP trend, like considerably above. For I'm sure for years it does that. It really only broke through in April of last year. That was the only meaningful time on this particular trend or time frame rather. So what we just witnessed was a bounce of the middle band, which again is super important. Does not happen very frequently. It is worth noting. And how price reacted to that at the moment is it didn't initially react to that level. It didn't seem to care, as you can see. Ripped right through that Fibonacci pivot at 66. Wasn't concerned about that. It did stop down at about 65.1. And it looks like the bottom of the candle there was 62.8, which that is reasonable to me. Like that makes sense to me that it would have stopped there. And we'll take a zoom out real quick on the weekly to see why. So as you can see here, we spent a bunch of time. This is 68. This is 64.1. We've talked about 64.1 multiple times. And then this is 62.7. That's the older pivot from 24. But it looks like we wicked down basically to the bottom of this wick, these wicks right here, in May and September of 2024, which were not the most significant pullbacks of them, but they were significant in their own right. And then same thing, you can see we dropped down basically right above these closing candles. These closing candles are at 59.9. And is that the exact low that we had? Yeah, 59.9. So you heard it here live, folks. This initial breakout in 2021, that's where we peaked. Not wicked. It did wick higher than that, but that's the close on the week, the highest closing price then. Well, this is actually reading as it's reading the wick, not the close. So this is saying the close. Oh, that one's way down there. I'm reading the wrong one. My apologies. Yes, it should be 59.9. Yeah, so almost 60K. I believe on the monthly it is slightly higher. Where is she? Where is my monthly chart? 58.9. It's a little bit lower. And then this guy is 61.5. So this particular expression that we're seeing right now is actually a little bit more clear on the weekly than the monthly. Let's clean this guy up. But the actual trend of the movement at the moment, which I think this is probably what's most alarming to you if you are relatively new to crypto. If you're not new to crypto, then you get it. You understand that these things happen. Let's take a look at that. This guy is the peak, roughly, give or take. And this is January, it's the lows. That's about a 52% retracement. A little bit more, actually. I think it's like 55. Same thing for here. This is December. And where are we by February, January? 69% retracement. Jesus Christ. 69%. So compared to now, where I was sitting now, again, we're a little bit earlier on our peak. It's in October instead of before. And we are down about 52% at the moment, somewhere around there. So technically, we could drop a little bit lower. There's nothing really preventing us from dropping lower with this seasonality, specifically of those are the two previous peaks. That's 2021 and 2017. I don't go back earlier than that because I just feel like it's not really relevant. We can go look just for shits and gigs, but I don't think it's going to be exactly the same. So this is peak November. Oh, would you look at that? It's almost exactly the same. Hold on a second. Clicking too many buttons. So that's not quite the top, but so that's March. This one happens. It takes a little bit longer for this one to happen, but same thing, like 70%. So a 50 to 70% retracement in that early part of the first breakdown after the all-time highs, which at this point, I'm sorry, I don't want to burn up your party, but 126 was the all-time high. We got to assume that that is the case at the moment. There's no reason to entertain any other fantasy that we're about to rip to all-time highs. Technically, it's possible because it is an asset that's purely driven by supply and demand. So if a ton of money floods into the market, it's possible. But I've talked about this in other videos. I don't think that the money is going to flow into stablecoins the way that people think that is going to flow into stablecoins until 2027. It's not this year. If you were paying attention to the news about the crypto market structure bill, what happened? Got delayed again. There's still the banks are trying to completely nuke the ability to have stablecoin yield and a bunch of other DeFi products. Why? Because it directly competes with their financial products. So they don't currently have an agreement that the crypto companies actually want to back, Coinbase, Gemini, etc. And the banks are I think they just got a slap on the wrist for manipulating gold and silver as well. They don't care. They're just going to take the fees that they have to pay, because what they get out of it is control. They get to continue controlling it and doing whatever the fuck they want, and all they have to do is pay a little tax for it. They don't give a shit. They're going to keep doing it. So Bitcoin specifically is just going to keep behaving roughly the same way. I think partially because it's just easier. Being able to read the chart really separates you from somebody who needs to listen to the news in order to make your own opinions. This is the great equalizer, in my opinion, is can you read a trading view chart or not? Can you understand the historical context of whatever asset you're going to throw your own money towards? If the answer is no, welcome to Bitcoin Escape Plan. I'm going to help you read the charts all the time. But seriously, this is the great equalizer, is if you can understand how Bitcoin moves, because I say this all the time, Bitcoin is math, not magic. It's going to be easier for you to take X amount of capital and turn it into a larger amount of capital over a given period of time, assuming that you are patient. So we've talked about this in other videos. If you were to buy the top, so let's say for whatever reason you're somebody who bought either the 2021 top, and then you were impatient and now you're scared because your money is about to go in negative again after you finally were positive. Typically when you are someone who is a top buyer, you're going to wait a period of about 5 years before you are in profit again. So this is 2021 in November. So we would assume it's going to be about November of 2026 before they are guaranteed to be in profits from that point of when they bought it. This is very important because I've talked about this multiple times in the video, or past videos rather, and on the channel in general. I really believe that the actual low that we're going to see this year is later in the year. It's closer to October, November. I don't think that it's going to be all at once. A lot of people think that we're just going to now suddenly drop down to 50 and lower right here. So to answer the question of the video, how low do I think it can actually go? I don't think it's going to go that low. I wouldn't have told you that I thought it was going to go to 59.9, to be completely frank. It does make sense to me, again, based on these. Let's go back to the weekly. Based on those closing candles in 2021, it is completely reasonable to me that the price would have respected that to a certain degree. I don't know the volume at this particular time of how many people were buying the top relative to how many people were buying in the middle, etc. Presumably, a decent amount of people were buying above about 56.5. Because we didn't have enough momentum to continue. So obviously, at a certain point, those people panicked and started flipping, or the people below them started to panic and started flipping. So that, at the moment, is acting as the only level of support that we have, is these closing weekly and monthly candles, which are about between 58.5K to about whatever this is, 65.3K. So just call it high 50s and low 60s essentially is the range where we're either going to consolidate here. And this is the interesting part, is the seasonality would indicate that we're not going to consolidate, that it will be a fairly quick progression. This is what I've highlighted in other videos. I'm not positive that it's going to break down this way, primarily because we're already so far below. We're already in this position pretty much. in terms of the monthly SMA, but correlated to this same seasonality time period. This is January, February, March. So what do we notice? We broke down in December. We hit the monthly SMA in January, closed above it though. Next month in February, we would have broken down further, although you can see the actual bottom in this instance is in January, not February, whereas for us, it is flipped. And then it did fight after that to resume to the upside, and you can see that a little bit clearer on the weekly as well. So this is December. December fails the weekly SMA attempt. This actually does show it a lot better on the weekly. So we break down into the bottom in late January. We jump up into early February, then give it right back by the end of February and are up higher. Whereas here, where we are now, what I would assume, and this is ugly. That's like right now, this looks considerably more ugly than the 2022 chart. Let's just be very clear about that. This has already been breaking down significantly since October. So we really very well might have already seen like this January test higher may have already been this guy. That looks very reasonable to me. And that is the closest that we are at the weekly SMA at that time. I use the 20-week SMA, by the way, for anyone who's a nerd and is curious. But this is still what I'm looking to see is, a rise back up from that initial breakdown, which is what we are currently in the process of experiencing. It really depends on where we close tomorrow. I'm inclined to say it doesn't fucking matter because we already dropped to 59.9. So no matter what, this candle is going to be kind of gnarly on the weekly close. But right now we're sitting at 69.5. And even there, I would say that's acceptable. I would say it's acceptable if we can close here or higher. I would imagine bears are going to try and push down the price on Sunday a bit. I will make another video about that tomorrow. I've recorded an hour-long video, by the way, about altcoins and all this shit for you, and then OBS just completely fucked up my audio. So pray to the gods of OBS, like and subscribe. Anyways, that video is never going to exist again. We're only talking about Bitcoin now because it cursed me. So that's what I would be looking for. About 69.5 to 71.1 would be the lowest I would want to see it close here. But again, it's kind of arbitrary. We're dropped so low that our best case scenario is going to be maybe the Bollinger Band starts to flatten or curve after this week. But at the present moment, it still looks like it's just going to continue to drop. There's no evidence that we're seeing a reversal yet. And in previous times where we dropped, at least we weren't on the, like this indicates that it's going to continue to go lower. This was not clear that was going to happen. We were on an uptrend still for the lower band. Whereas over here, this is 2022, this is looking more like where we're at, where it's a significant downtrend for the lower band as well. It's indicating to us that we are going lower, as well as a downtrend on the upper band, which, same thing. We are indicated at the moment that we are going lower. Let's take a look at 2018 for that as well. 2018 is a little bit kinder during that time period. It takes longer for this progression to happen. But the primary breakdown did happen pretty much the same exact time as now. So first week of February. That was the low then. The low was, would you look at that? Exactly 10x what it is now. So this is 5,900. Essentially is the low in 2018. I didn't even plan that. I didn't even know that for this video. This is what I talk about, people. Bitcoin is math, not magic. It's not magic. It's literally go figure out the important points on the chart. For example, if 126 is the high, what is the logical, what's an important number around 126? There should be two that jump out to your mind, Sorry, this is not Sesame Street or some shit like that, but the two that should jump out to your mind depends on whether we're talking about the psychological levels or the math levels. The math levels, if it's 126, what I would say is the most important one besides that would be 63K. Why? Because it's half. It's half. Whatever the top is, what is half of the top? It's an easy one for people to wrap their heads around. You can write it on a piece of paper, and do it in your head. But that, like, you have to go to the simplest idea is where the money flows typically. So it's not like every asset behaves like this, but this is how Bitcoin behaves. And therefore, we should continue to act as if it's going to continue to behave this way until it's clear that it doesn't. If everyone has said that the 4-year cycle is going to be broken and that we're going to have a super cycle, where are those people now? Huh? Are they still saying that now? Or does it look exactly the same as it has every other fucking cycle, which in my opinion, it looks exactly the same. So relax, people. So what we're looking for at the moment is basically we want to see that same reversal that we would have seen in February as well in 2022 and in 2018. Because we got basically the same movement. We're down into the end of January or early February. We got that breakdown, and then we had one more test of the monthly. This is the weekly SMA. One more test of the weekly SMA before it broke down. I believe in both cases. Yeah, it's a little bit more pronounced as a possibility in 2018 versus 2022. It's like pretty clear. Oh shit, we failed it. We're out of here. And I do anticipate that this time. I'm sorry. That's a way sharper decline on the weekly SMA than we have on, any other historical timeline. So I think it's actually going to be kind of ugly. The only thing that's saving us there is we just saw the ETF buyers either just stepped in at these levels because they don't want to see the price go lower and for them to be out of profit. It's very possible. I will go over that later in the video. Actually, we're going to take a look at DeFi Llama, and it doesn't actually show that for the ETF inflows. At least it shows that they're negative over the last couple of months. So I wouldn't really say that is the reason personally. But if we're looking at the key levels, just as a reminder on the historical context, and then I'll jump into Bitcoin dominance real quick because I think something interesting is happening over there. So if we look at the Fibonacci pivots, we closed last week just above 76.2K, but we did wick below it, and that's what gave us permission to break down lower this week. And as you can see, at the moment, we're probably going to close somewhere in the middle. So there's a little bit of uncertainty, and I would imagine going into next week, maybe we have one more retest of 64K before showing strength and going higher. Again, if we're going to see the same rough trend play out, there is a possibility that this represents the only failure we're going to have with the monthly SMA. And that our actual retest is going to be this guy at 76.2, which would indicate that we go considerably lower now, and that we head towards that 44K pivot. That's not my baseline assumption. Like, I don't really think that's going to happen. I think it's more likely. I've talked about this many, many times on the video now, on the channel rather. This weekly SMA is going to break down below 96K as soon as this week prints. So tomorrow. Not tomorrow's video, but by Monday's video, I'll already have this data where this will have broken down below, which means by the time we get back to 96K, it's going to be acting as resistance, not support, which I mentioned earlier in the video. So if we're going to see a similar trend to 2018 and 2022 and even fucking 2014, just went and looked at that one as well, and it was identical. It's just a little bit more volatile. Then we should expect either slightly lower, again, depending on if they can really push, if bears can really push down tomorrow, so we're closer to that 64K pivot, then there is a high likelihood that we actually haven't seen the low at 59.9. I can believe that we have, just again, because of what I went over earlier in the video, that there is some weekly and monthly close supports at the all-time highs of 2021. So those people are going to really want to defend their cost basis. But the reality is, again, as we said, the reality is that those people are going to have to wait a period of 5 or more years in order to be in full profits, which in that particular instance would put from their local bottom would have been like March, April was peak, and then November, December was peak. So it would essentially be 5 years from March or April, which I do think, based on what we're saying, I do think that that's probably March, April is going to be represented as the peak of this recovery move. If it does take all of February for us to chop higher, which this kind of gets invalidated if we just consolidate in February. Like if we just keep chopping in between 64 and 76.2, then I think it's less likely that we get a break towards 96, and we're going to be lucky to get back to 80 essentially in that particular case. But my baseline assumption is still that we're going to make a more violent recovery back towards 96, and then that's where shit is going to go down. If we get to that point, I personally will be shorting like as much money as I can, because I don't think that it's going to magically break higher, especially with all the uncertainty around the crypto market structure bill. I don't think it's going to get better until it gets worse. Let's take a look at Bitcoin dominance. So I always say Bitcoin dominance is like a choose your own adventure story. It's like every cycle is completely different. So it's really not like you can do analysis and that's all well and good, but you don't fucking know. You have no clue what the hell is going to happen. So early in the dawn of the dinosaurs, when there were only a few different cryptocurrencies, Bitcoin ruled 98% of all cryptocurrency. In July of 2016, that starts to change. ETH, XRP, etc., are starting to become more relevant. They already existed, but now they're becoming more relevant. We dropped down to 95% dominance, and by March of 2017, which is probably right around when Ethereum started to do ERC20 tokens, 720 tokens, that's when it drops off a cliff, and suddenly money is flowing out of Bitcoin en masse into everything else until it finally drops and bottoms in January of 2018. Why is that fascinating? Because the peak obviously was in December of 2017. Ethereum peak was in January of 2018, meaning that when Bitcoin reached its absolute top, on the way there, Bitcoin dominance was going lower and lower and lower. And we do see this trend expressed a couple times. So this guy, the peak is January of 2021, December of 2020 is roughly where Bitcoin dominance peaks. This, of course, is right before the all-time highs. So in this particular instance, it actually saw its local peak. No, it saw its local peak in December of 2017. So that's what I mean. It doesn't always behave the same. Like if it was going to behave the same in 2021 as 2017, then we would have anticipated that it would have peaked actually in November, December of 2021. And that's when money would have flowed everywhere else. But that did not happen for Bitcoin in 2021. It actually started flowing out of Bitcoin immediately, which may or may not have caused the double peak or like the... it happened very quickly from January to April for Bitcoin in 2021. I don't think anyone was really expecting that. That's why there is a possibility that we just snap right back to 96K now. Obviously, different part of the cycle. You know, that was the post-halving year, whereas now we are in the bear market year, or whatever the fuck people call year 4 of the halving cycles. So what we're looking for now is for Bitcoin dominance to finally break down on the monthly for Bitcoin dominance. Literally since August of last year, we've been flirting with this the whole time. This is the first month so far where you can see not only did we close below it last month, but we've been below it this whole time other than a slight wick above it. So it's likely, finally, we've talked about this a bunch of times and it just hasn't happened. It finally is starting to look like Bitcoin dominance is going to capitulate and start to drop, which means that the money in crypto is going to flow elsewhere. And while I would normally say that that means it's going to go towards altcoins, I actually don't think that's the case now. I think it's going to flow towards stablecoins. It's going to flow towards people wanting yield and wanting utility at the moment, as opposed to it flowing to fucking Floki and Fartcoin and even Pengu, even glorious Pengu. Money's not going to flow there. It just doesn't make any sense, you know? So that also will probably correlate with, like, if we look at the bear market. So where is the bottom? About November of 2022. What happens after that? Bitcoin dominance starts to recover. So where is the bottom? It's about January of 2019. And then it starts to recover. It takes a little bit, it consolidates a little bit after that, but then it starts to recover. So what we would be looking for is the actual and this is where it's so funny, is like October to November 2018 is the local bottom there. It does actually drop a little bit lower in January of 2019, but functionally we can think of that as the local bottom of that cycle. And Bitcoin dominance was essentially peaking then, before it dropped a little lower and went higher, which is again completely opposite of the 2020 cycle. So I think it's like, with the price itself, you actually can anticipate some seasonality, but with Bitcoin dominance, good fucking luck. Like I don't think it's quite as easy to extrapolate clear data from this chart. But what this is telling me now is, if we are about to see a breakdown, and a significant breakdown below the monthly SMA, all that means is that people are going to flow out of Bitcoin to the rest of the crypto market. I'm not sure if this one actually excludes stablecoins or not, but me personally, that's where I would assume the money is going to go initially, especially with stablecoins becoming an increasingly important narrative. Even just the fact that like PayPal USD and stuff like that exists, I think a lot of money is going to initially flow into these JP Morgan Chase coins and things like that, because what the banks want to do essentially is they want to incentivize you to spend more using these stable coins. They don't want to give you yield. They want to give you points for actually spending it, which is just going to increase the amount that they have to print, and therefore the amount of US Treasury bills that they have to buy. And therefore it props up the US dollar to just continue the regime that it has had. But now the customers of US debt are not going to be Japan and China and Brazil and Russia, in the form of like the governments making an agreement. It'll be the people of those places who are using JP Morgan Chase coin or PayPal coin or whatever, that those companies are required to back that one-to-one with the US dollar. So super important. I think a lot of money is going to flow initially into those stablecoins, just because JP Morgan Chase is going to give you like a crazy bonus points if you use X amount of stablecoins, or if you send X amount of transactions or whatever. That is the vision of the future that the banks would like. And that's why the crypto companies specifically right now are fighting for that part of the crypto market structure bill, is because they want to be able to provide yield and staking products. And actually, let's go over, take a look, good old DeFi Llama. So one thing I will say about this that is healthy is, I believe that we are seeing a floor come in for DeFi. I do think that 2022, 2023 served as like the lowest that it's going to go for a little while. And if, as you can see, even as we're like dropping to lows now, we're still at $100 billion total value locked, which that was a milestone that we broke in 2021, essentially. Like that would have been very significant in 2021 for us to break that level, let alone to sustain it. We made a run to almost 200 billion, not quite 200 billion. And then it started to break down and spend a lot of time even below 50 billion, even below 40 billion. So pretty healthy for there to be that much trust in DeFi itself at the moment, that $100 billion is comfortable chilling in there, which is about whatever, like a 14th or a 15th of the market cap size of Bitcoin itself, just for context. So I ignore most of this. That is pretty important though, that the DEX volumes is actually, that's a lot. I mean, it's not obviously as much as the centralized ones, but that's a lot of money that's flowing permissionless. That's flowing on these platforms that you don't need to ask. It's great. I think it is for the rich more than it is for poor people. I think for poor people, it's very simple. Just buy Bitcoin and find strategies to increase how much Bitcoin you can buy. But for everybody else, it is important to look at this type of shit. So ETF inflows are negative for most of January and have been negative for most of February at the moment. Digital asset treasury companies, the inflows are also not negative, but very low, other than a couple spikes. I mean, 4 billion is not low over the course of 30 days, but I do believe that is lower than previous months. And then this is basically what I said, that if money is going to start flowing out of Bitcoin, where is it flowing? I think it's flowing to the stablecoins initially, and we are seeing a recovery in stablecoins. They dropped like everything else did. Money was flowing out of crypto was flowing out of everywhere that week. Everyone was very stressed. So if we go down and take a look at the largest projects, so Aave, this is a perfect example. I'm not going to go into the whole video now. I've already accepted it's gone forever. But the altcoin video, like for something like Aave to not be performing well as a token, for me, like completely removes all my faith in wanting to invest in an altcoin instead of in Bitcoin. Even something like Chainlink. Chainlink has partnerships with every respectful company in crypto. Everybody. And the chart looks terrible. It just looks terrible. Like it does not outperform Bitcoin. And therefore, why the fuck are you buying it? You don't need it. It doesn't make any sense for you to do that. The same as if you were holding a stock that's underperforming the S&P 500. Why are you holding that stock? Why? What is the purpose of you holding that stock instead of something that's going to increase in value more, that's more reliable for you? So for something like Aave, which is where the most value of anywhere in DeFi is locked, it's 28 billion. So that's literally like 28% of the money that is locked in DeFi is on Aave specifically, because Aave is great for anyone who hasn't used it. The one that is interesting to me, though, is this Morpho. I had never heard of Morpho before. I started to look into it for this video. And Morpho, what they're doing is they're providing access to yield or lending products. And they're doing it through companies like Coinbase and Gemini and Ledger, Trust Wallet, and a couple other ones. So why I think that's really interesting is that's basically the same thing that Celsius was doing, but without the rehypothecation of your funds, as far as I'm aware of. Because I was looking at the Morpho website, and it's essentially just code. Like it does seem like very similar to like a MakerDAO or an Aave or something like that. They're essentially just like allowing you to participate in the smart contract of you hold Bitcoin here and they give you USDC for it or USDT or whatever. Very interesting. I was looking at it a little bit on Coinbase, and it does seem like it's not quite as flexible as an Aave where you can choose what you're supplying, you can choose what you're borrowing. It was very much more like you put up Bitcoin as collateral and they tell you what the rate is. But it was pretty favorable. I forget the exact amount, but I think it was like 4.5% or something like that. Which is better than Celsius was 0%, and that should have been a red flag that I paid more attention to at the time. But that is something that I think is going to increase a lot over the course of the next couple of years. Is lending specifically, I think is going to become massive. Like it's just something that people understand already. You already understand what a mortgage is. You understand what a secured and an unsecured loan is. It's my understanding, and this is from people like Ray Dalio. It's not my opinion. Is that we're moving towards a hard asset backed credit world or hard asset backed financial system instead of a credit based financial system, because we're way too over levered on credit in general. Which means banks and other issuers of debt are going to start prioritizing people who have some form of assets. It's just going to be easier for you to do business with them, which means that if you have a lot of Bitcoin, it's going to be easier for these companies to give you bonuses and incentives to do business with them, which is what they want. So this is part of why I advocate for, I think it's acceptable to learn all this stuff, but unless you have like a lot of money, you'd be hard pressed to like actually keep your earnings from using DeFi, from having to like spend on the Ethereum fees and everything else. So like you have to, if you're going to use it in the first place, you have to have an engine for continuing to buy ETH forever. And I don't know if you've looked at the ETH chart, but it's not something that you'd want to buy forever. Like I'll bring it back to Bitcoin to round out the video, but why would you want to buy this underperformed Bitcoin in this cycle? And it's more volatile and less predictable. It's not showing the same essentially uptrend. It doesn't look like it here. It looks like it's only a downtrend, but it's still essentially a clear uptrend. That's not the case for Ethereum. It's pretty much flat. Like it hasn't really gone anywhere. It's gone up for a bit, but it didn't stay above there very long, and we're barely above it now. So that's what you have to accept when you are participating in something like DeFi. Is it's going to cost you money to participate. So it has to be appealing to other people. And where I think it's going to be appealing to other people is actually the arbitrage trades, like when you're able to, like, you lock up X amount of ETH and you borrow stable coins, you take those stable coins and you go do something else with it. Like you're able to like actually go generate income from the money that you're putting up and then borrowing. In that respect, it is very interesting. In the same example that I just gave of like banks are going to want you to have collateral in order to give you loans. Well, with decentralized finance, you don't have to ask permission. It's literally you just either have the money or you don't. The same way for like using margin with like a brokerage, you either have the money to back the margin or you don't. If you don't have it, then they're not going to give you the money for the margin. If you have it, sure, it's your money. Do whatever you want with it. You know, like that, I think really is the power and the flexibility of DeFi. And that's what they're specifically trying to figure out with this crypto market structure bill is they can't come to an agreement on stablecoin yield, because stablecoin yield is literally, that's how they create the arbitrage between holding one asset en masse, borrowing USDC or USDT against it, and then going and buying more Bitcoin or whatever. The same as the yen carry trade, you know, like these forces of liquidity exist as it currently stands within DeFi, and the banks don't like that. I don't know what the ethics provisions part is, but related to President Trump's whatever. This is the point. Anyone who thinks that the money is just going to start randomly flowing and printing this year because of this bill is delusional. As far as I understand, it doesn't go into full effect until January, and I have read things now that say it doesn't go into full effect until 2029. So I don't think this money printer is going to be turned on the way that people think it is. I think it's more likely, and I've said this many times on this channel, I think it's more likely that we continue to break down into the end of 2026, even if it is slightly earlier. September, October is the bottom, and then we start to see a recovery. But if we think about it just narratively speaking, what is the major story of 2025? How high can Bitcoin go? What is the major story of 2026? How low can Bitcoin go? Framed within the psychological narrative of the 100K level. That's the very important one. That's the one that old whales have now sold billions of dollars. So it'll be important for us to see, do any of those whales re-enter the market? At what levels, if any, do those whales re-enter the market, or have they completely moved on? That is an important factor. And then, yeah, we just have to basically wait and see until we've bottomed out later in the year. I don't think we have bottomed out now. I do think there's a potential that we've bottomed locally now, but that doesn't mean that we're done dropping for the year. It's my belief that we're going to drop for the whole year, essentially, until October, even if we have periods of consolidation and spikes in between that. It's not a bullish year. So that's what we're looking for, is if we continue to see a breakdown, right after that, right in 2027, which again, if we think about it just in terms of, I'm JP Morgan Chase. I have hundreds of billions of dollars, trillions of dollars of client funds that I am in charge of. And what I want is I want my clients to be incentivized to buy as much things as possible on the platform, which for them, they're going to be trying to, they have all these other products that they already have a ton of money in, that they've already squeezed as much juice as they can from the lemon. And now they need another lemon, and Bitcoin is just a lemon. The stable coins are just another lemon to them that they're going to squeeze as much as they can. The best way that they're going to be able to do that is if the price is lower, so that their high profile clients can buy more of it and everyone else can ape in as well. And the high profile clients will have access to it first. That's why they've already rolled out things like the Bitcoin-backed loans, and they will continue to add more services over the course of the year. By the time the price bottoms, that's when they'll be able to have the big promotions of like, get 10,000 points when you spend $5,000 or whatever the fuck, you know. You will see that. You will see those offers from Citi and Chase, and then it'll trickle down to the smaller banks as well. That will be pretty much all of 2027 and 2028, I think. Is when we start to see those promos hit hard. Then liquidity will return to the market. That'll be timed with, again, if 2026, the story is how low can Bitcoin go. I believe that the story for 2027 is, can it get back above 100 / what happens at 100, you know, like we'll return to that psychological level after. We're already seeing it now, you know, for us to see 98K as a local peak here. all that tells me is that we're viewing 100K as a psychological barrier again, that we've broken above it, and now we are viewing it as resistance instead of support. That's it. That's what's happening this year. We now have to continue to go lower. Next year, we will then try and retest it as support. Or I guess maybe they're not going to write that in the news stories, and that's how I'm trying to think about it. Is what's the simplest phrasing for it. So I do think for 2027, it's something akin to, can it get back above 100K? Or for us, it would be, can it flip 100K from resistance to support? That would be the story of 2027. And then not until 2028, I think, would be the earliest that we see 100K plus again. And that could be early 2028, depending on if there's another big rally around the halving itself. Which I don't think anyone really anticipated in 2024, but that was largely because of the ETFs as well, I would say, more than the halving. So that's what we're looking for, is a continued breakdown for the rest of the year, a sustained recovery and consolidation period through most of 2027 until we get closer to that 100K mark. Once we get back to that 100K mark, then we can have a full recovery. What does that mean for you as an individual, and what am I personally doing? What I personally am doing at the moment is I'm not buying yet. I am going to wait for lower. I don't think that there's anything wrong with buying right now. I think that's a very good strategy depending on your income and your situation. Me personally, I am going to use my credit leverage strategy that I talked about in other videos. That is my primary focus for this year, because I'll be able to buy considerably more Bitcoin than I would if I were just dollar cost averaging at a significantly lower price. There's a possibility that I'm wrong and that I miss my opportunity, but I don't think so based on the chart. I'm pretty sure that we're going to continue to break down below the weekly and monthly SMA for a significant period of time. And any time during that, I can rip the strategy and I'll be very comfortable and happy with that. Broad brush notes for anyone who has not watched that video. Basically, you leverage your credit balance transfer offers with your available credit on your credit cards to borrow against your future income. So in this particular instance, let's say that I want to borrow $12,000. That means that I need to have $1,000 a month over the course of a year. That is extra from my expenses that I can do whatever I want with after I pay taxes, expenses, etc. That $1,000 is just burning a hole in my pocket. If I get a 12-month balance transfer offer, which typically it'll be 9 months for an intra-card offer, and it'll be 15 to 21 months for a new card offer. But regardless, you take the amount of months, you divide it by, the amount that you actually want to borrow. And in that particular instance, I would have to come up with $1,000 a month to buy Bitcoin at a variable cost, because it's going to continue to fluctuate. My average cost would probably be somewhere between like 60 and 80, I would imagine, over the course of this year, if I were to just dollar cost into it, versus I do think that we're going to 50 or sub 50, and I'm planning on ripping at least 10 grand or more at that time. That's just, I wish it were some more money. That just happens to be my situation. But that's what I'm looking for, is taking a large bet when we are at 50 or sub 50. And then I'm comfortable with, it doesn't actually bother me if the price goes lower after that. I really am thinking about it of, if it goes to 50, then buying $10,000 worth is 0.2 BTC. That's all anyone should be concerned about. While we are below the monthly and weekly SMA, that is the time for you to get your cash situated so that you can expose yourself more to Bitcoin during those times where it's going to disproportionately reward you for doing so. So we are currently below both the weekly and monthly SMA. So that's when you should be thinking about your DCA plan already, if you have not already started it. It really just depends on, one, how comfortable you are with being patient or being wrong in some cases, and your access to capital and cash. You may have run out of all your cash last year, which is partially why I'm just focused on building my cash position now and reducing debt so that I can use debt as an instrument again. And that's going to be different for everyone. Me personally, I had to learn the hard way from trading other altcoins, from trying other strategies, which I will say I am going to try the futures contracts on Coinbase now that I realize I was looking for a way that I can actually long and short the price without having to be locked into IBIT contracts, because it's a pain in the ass to have to wake up at 6 o'clock in the morning and I have to be right by 1:30 in the afternoon or else I'm locked in a trade. That's a pain in the ass. I don't want to do that. So I was looking at the perpetuals contracts, and I can't do them in America, I guess, but I can do the futures contracts. So I'm going to be studying those. I'll report back in a later video if I actually am able to like find a strategy that I like. But realistically, what works for me actually is this. This is what I'm actually good at, is understanding the broader swings of the market and how it's going to behave. You know, I wrote on a fucking piece of paper in 2022 that I believed the price was going to go to 130 to 150 or 180 to 210. It went to 126. You know, I did that on a calculator. I didn't have this chart. I didn't have all of this. I had this candle, November 2022. I didn't have any of the rest of this chart progression to base that off of, and I was able to do that. I believe that that is the beauty of Bitcoin specifically, and it's part of why I'm leveraging. If you think about it as like you're shorting your US dollar essentially, or you're shorting your like future labor in fiat terms, and longing it in Bitcoin terms. And I think that's really something that people need to focus in on, is not what is the dollar value of my portfolio. It doesn't matter. What is the Satoshi value of your portfolio? That's what you should be focused on. If we are long-term still headed towards the broad targets of 1 million plus, you're not going to care if your cost basis was $35,000 per Bitcoin or $70,000 per Bitcoin. You're not going to care. It's not going to matter. I mean, obviously that's double still, so it'll be kind of nice, but it's not really going to matter. You're still going to be in a really good position at that time, assuming you had enough exposure to Bitcoin. So you are not going to get that exposure by being in MicroStrategy. You're not going to get that exposure by being in quantum stocks, you know, or in any of the other altcoins. You're going to get that exposure by being in Bitcoin itself, and you can only capture the exposure from all of the other trades if you actually sold them instead of round tripping them. I'm not going to look at XRP, but XRP is a famous example of it slightly outperformed Bitcoin and then it round tripped it and everyone still held and didn't actually increase the value of their portfolio. They just watched it go up temporarily and then left the capital there, which is a terrible idea. And that's why I buy Bitcoin. So I'll talk more in tomorrow's video. I did ramble a bit in this one. We'll see, I guess, again, like where the weekly close is going to be super important. But at the moment, it's kind of like right around where we want it to be. I mean, it would be nice if it's above 71, but we would need to see pretty significant strength there. And being above 69 is better than nothing because, again, that's the high of the wicks of 2021. And that's all we have. That's all we have right now is psychological levels. We don't really have like there's not enough volume, like actual dollars, to prevent the money from continuing to drop lower here, or for like short sellers essentially to be able to step in and take control. There's just not enough money at a lot of these levels. Like if you look at this candle, like this is from like 35K to 60K. That's a monthly candle. That's 1 month. You know, same thing for this guy, October, a high of 67 and a low of 43. That's a $20,000 candle. You know, we don't have a lot of time at these levels, and it's very quick. This is the same. This is 41 to 64. So we have multiple examples where the actual progression of these levels were too significant. Here, we actually have more time, and this is why I do actually like. See, there you go. This is 59.1. Where do we wick to right now? 59.9. And even this guy right around there, 60.5. I do think that there is evidence of consolidation between about 60 and 73 because of 2024, because of all the ETF buyers. There is a possibility that it's enough to form the support right now for us to have that bounce higher. But I think that there's no scenario where we are going to, I don't think we're going to see the monthly SMA again anytime soon until probably next year. I would assume, is the next time we're going to touch that. We probably will have one more failure on the weekly, like I said, based on that 96K pivot. And that's pretty much it. I'll talk to you tomorrow. All right. Like and subscribe. You guys are the best.